The focus of the national economics conversation has been month-to-month changes, with the Federal Reserve last week announcing its first rate cut since the COVID-19 pandemic.
But what about the next 1, 5, or 10 years? Daniel Lacalle, chief economist at Tresis and author of Freedom or Equality, gives a dire forecast in his recent article for the Mises Institute. I spoke with him about what he thinks lies ahead and what can be done about it.
Well, I don't think that anybody that looks at the recent past can deny that there's been a very significant monetary destruction. The purchasing power of the currency, the US dollar, the euro, has been eroded by massive money printing, huge government spending, etc. However, if we look at the future, we know that governments in a period of high inflation did not reduce expenditure, did not reduce deficits, and continued to bloat government debt, despite growth and record tax revenues. So if we add all of those elements of added debt that are coming, in the case of the US, the Treasury itself estimates that between 2024 and 2034, they will add $16 trillion of debt to the national debt, even considering no recession, no crisis, no job destruction, and record revenues. So if we add to that the enormous amount, which is what very few people talk about, of unfunded liabilities. Unfunded liabilities in the case of the United States are about 100% of GDP. In the case of France, it's about 400%. In the case of Spain, it's about 500%. We're talking about a requirement of new debt from already committed expenditures that have not been issued as debt yet, that are likely to drive public debt much higher and central bank monetization of that debt, therefore destruction of the purchasing power of the currency even further. So it's basically just let's say an acceleration of what we have already seen in 2008 to 2020.
So you're saying what's more of the same is coming, but it will be unprecedented and it will have devastating effects. How could this affect people, the average person in America, what you're talking about here?
Your wage, your deposit savings are going to be eroded. Your real wages, the purchasing power of your wage is going to be lower. It'll be more difficult to make ends meet. It'll be more difficult to purchase the daily goods and services. And obviously, the savings in deposits will be worth less and less. That's why it is so important for anybody to invest, no? Ultimately, the reason why markets reach all-time highs, why gold reaches all-time highs, etc., is basically discounting an enormous level of monetary destruction that has already happened and part of what has been compromised and committed for the future. No? So that's why even when there is a correction in markets, they are usually an opportunity to purchase investments and to protect yourself against inflation via investment.
So Daniel, is there anything that can be done to prevent this, or is it just unavoidable and all we can do is get prepared?
Well, there's a lot that can be done to prevent it. Number one is everyone that watches TV and hears governments or politicians promise billions and billions of dollars in new entitlements should know that that will mean lower real wages and lower deposit savings in the future. So basically, we need to understand that governments are not going to give you anything that they are not taking and in advance from you, and particularly from the lower and middle classes. A lot of people hear these enormous spending programs being presented in elections and think that those are going to be paid by the wealthy. That is not true. And that it's mathematically impossible, but it doesn't even matter, is that it's never true. A lot of things can be done. Another, obviously, is to focus the political debate not on spending and cutting, but on growth, on really driving productive growth, really driving more larger companies, more investment, more growth in the economy. There's only two ways in which all of those enormous commitments are going to be paid. Either with more growth and more prosperity, or with less growth and much higher destruction of the purchasing power of the currency. The more that we believe in the promise of of wealth being created by governments, the clearer it is that we will end up in the second phase.
All right, Daniel Lacalle, thank you so much for breaking down this article and the economic situation we find ourselves in.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.